Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions and answer any questions you might have. Good morning, Joseph, Don, Fred. Some of you are from live trading room. We want to follow up on the trades. So welcome. I appreciate your time. Good morning, Joseph, Don. I apologize for last week. I was late. So and a lot of you are left. So my apologies for last Friday. Disclosures are very important. Please read them. Simon, Dr. Simon, welcome back. Again, sorry for being late last week. If you're new to trading, I would encourage you to visit optionstrading.com so you can understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right, trading plan is important. I encourage you to keep your portfolio, 30% of your portfolio in cash, and look at the portfolio drawdown. Right, so let's look at how do you calculate portfolio drawdown. Basically, in all of our services, the idea is to have 4 positions and 2.5% of account value position, account value per position at risk. So you're risking 10% of your portfolio. This is very important for somebody who's new to trading or new to our services, right? If you're managing others people's money and you've been broker for 20 years, then that's probably not applicable to you. But if you're just starting out, or you still can't get the, you don't have a trading plan, or you don't know how to build a trading plan, or you haven't followed your trading plan for a long time, then this is something that applies to you. 4 positions, 2.5%. How do you determine that? So you basically you look at this, one tool that we have is Stock Forecast Toolbox, right? So if you go to Stock Forecast Toolbox, this was calibrated, determined yesterday at the close based on the closing price. So the model runs on, learns on earnings price action and price action of underlying asset class. So for spiders, it basically predicted 652 is overhead resistance, right? Too far, too high. 64 is the buy zone, right? So if you want to consider buying, then the idea is to buy it at 644. And if you want to consider trimming position, 652. Notice we hit almost to the penny. So today model gets an A. We better than expected, not that, worse than expected employment data, sharp drop in interest rate, probability of lowering interest rate. It's from the bull's argument, this is good for market, right? Companies can refinance their debt at lower price and their cash flow should increase. That's why you see small caps and home builders pushing the market higher. They pushed it almost to the penny, right? Within 30 cents, which is, I think, is incredible. And then, we're now at 640. I mean, we're actually approaching 644, right? We are approaching 644, almost to the penny. Sometimes, market could get above that level, right? If you look at the Broadcom, right? If you look at the Broadcom, there was model predicted 300 to be support, 310, but it did not know about earnings announcement today. No, it was a train to predict what the outcome of the earnings. So sometimes you trade outside of the range, right? So in this example, we were as high as 357. Right, we were as high as 357, trading 339. So that would be, the flip side. Out of spite at 10 cents. Yes, I think I got filled too. Yeah, so I got filled at 10 cents. Still watching Broadcom. Broadcom is actually holding up better than the market, which is good. I'm going to probably exit if it gets above 342. We'll see if it will or will not. But you can see pretty divergence. And NVIDIA continues to go lower. So that's Stock Forecast Toolbox. Sorry, I'm jumping. So that's the Stock Forecast Toolbox. This is one of our main model that shows you where support and resistance levels. If you look at SPX, all right, let's see the gamma get recalculated. Basically, a lot of positioning, right, in futures market and options market. And the question is, does equity drive options or options drive equity? With exponential growth in options market, sometimes it's the option that drives the equity. So you could see the wall 6,500 in the morning. It was 6,500 on the put wall, and the support is at gamma flip is at 6,460. So as long as we are above 6,460, bulls will step in, right? Bulls will step in and support the market, right? And we're trading at 6,480. I think it's delayed a little bit lower. So at this point in the morning, 6,500 was a support, and I said as long as we're 6,500, then bulls are in control. Now we're approaching, I think, 6,460, right? We're right at that flip point. So in theory, at some point, bulls will step in, right? Bulls will step in and drive the market higher. If it's gonna drop below 6,450 and stays below 6,450, we could have quick move to that support put wall at 6,400, which we were talking about, for the past few weeks. So we'll see if, we'll see if the 6,450 will hold. And same thing could be said about Broadcom. Any questions? Yep, spiders work. We'll see. Broadcom might also work. At least minimize the losses. So trading is about predicting possible outcomes, right? So if you look, it's usually bell-shaped distribution curve. So let's look at I'm looking at the September expiration, which is in 2 weeks, right? I encourage you to start thinking about closing your September position, and then the next is October. One thing to note is that really nobody's buying October options, which is very interesting, right? Nobody's hedging. Most of the concentration is in September. It's growing 90 billion, so it's pretty good. 90 billion, $100 billion worth of position in September. So September is still well positioned. So I would pay attention to these levels. So 6,400, actually 6,450 is a large put wall. So somewhere between 6,450 and 6,500 is your support and resistance. If you zoom out, so one standard deviation, we're revisiting the 6,300, 6,350, right? This is the last 2 weeks low, 50-day moving average, right? Right around that. So that's one scenario, right? That we break through this level, right? The other scenario, we're trading in the range, right? This is basically supply and demand of options data for September and October contracts. On the upside, today we were above 6,500. So the next level is somewhere above 66, 6,700, right? But we're moving to the right, like Broadcom. $10 billion contract was Google. The AI theme is alive. It's improving the efficiency. You can get rid of all the customer service people and replace them with chatbots, right? Like Tradespoon, now AI chatbots as opposed to live person. You can still talk to our live product managers. AI is still not as good as live experienced product managers, but customer service answering the phone, AI are very good, right? So a lot of people are going to be replaced if you're just doing customer service calls. But nonetheless, Broadcom is one of the beneficiaries. So those are the three scenarios. Scenario number one, based on Broadcom earnings, rates are down, right? Strong earnings, better than expected, double-digit revenue growth, and we're heading higher. So that's scenario number one, going into end of September, end of October. We're going into the next earnings cycle. right? Fed Powell might cut interest rates by 100 basis points, right? Instead of, sorry, 50 basis points instead of 25. And you have scenario number one. Scenario number two, for every good news, you have a bad news, right? The CPI is better than expected, PPI is worse than expected, employment data is worse than expected, interest rates, are down. So you can, kind of, we're trading in the range between 6,300 and 6,500. Right? Scenario number two. Scenario number three, unemployment was worse than expected, right? It's revisions down, very new low jobs created. Unemployment rate is ticking up, 4.3%. Next time maybe 4.5%, 4.6%, and then we're, approaching 6,000 level. So those are the three scenarios. Scenario number one, we're going to move one standard deviation, move 2 standard deviation to the right. Scenario three, 2 standard deviation to the left. Or scenario number two is we're trading in the range. And that kind of, actually, this is based on implied volatility. If you look at the historical volatility, which I didn't look, but I'm going to make a bold assumption that it's very close. Let's see if it's working. All right, so seasonality, right? Seasonality, usually after September expiration, there's a drop in the market. Very high correlation. We're moving at 90% correlation to the historical data. And based on the historical data, 640, 657. So same thing, right? 635 on SPX, 635 to 660, 640 to 657. So 76 probability that we're trading in the range. So how many of you say one, we're moving above, we're minority, 12%. How many of you say no, I want to stick to majority of the time, the distribution of outcomes, 76%, or I'm moving to the left. Scenario number one, BJ, Don, Ed, Fred, Joseph, Dr. Simon. Great. What are we thinking? 3. 12% probability. Okay, Joseph, we're moving to the left. 588, right? 600, 588. 2 standard deviation, move to the left. Okay. How many of you, anyone else? Fred, mid-range. Okay, Fred is going to stick with 1 standard deviation. 657, 640. Okay, I'm going to stick with Fred, right? 1 standard deviation, 630. I would call 630 to 660. 630 to 660. I think we're going to trade in that range, because I just don't know. I mean, obviously, if inflation comes in much harder than expected, if unemployment get much lower than expected, if there is some tariff news, great. Then I would have to change my opinion, right? You have to stay flexible. Right, one of the points is to always be flexible in your opinion, right? Today it's 1 standard deviation, tomorrow it might be 2 standard deviation, but it's something you want to keep an eye on. Any questions on the probability chart, seasonal chart, right? We went through the Stock Forecast Toolbox, right? It gives you great letter B. Today I give A for spiders, right? This is very important. We started doing take advantage of that with short-term trading like spiders, right? So at 650, big overhead resistance. So I sold 651, 652, which, I think Fred, forgot what, Todd, Ted wasn't very happy because, and he's right, like you usually do not want to, do short-term or day trading in front of the big news like earnings, but my argument was that overall my portfolio is bullish. It makes sense to sell out of the money calls because there is a big wall at 650, 152, 650, right? That's 6,500, and we did reach 652, but then rolled over very quickly, and I was able to close it for 10 cents. Custom for economic data, yeah, mid-range. Thank you, Jared. So that's Stock Forecast Toolbox research. In terms of trade idea, these are the tools. We also have signals, right? We have short-term signal, kind of a medium-term signal, and long-term signal, right? If you're a long-term trader, you're thinking about months. If okay, you go to monthly trader. If you short or medium-term trader, you're thinking about weeks, right? 1 week, 2 week, 3 week, okay, weekly trader. If you're short-term trader, a lot of people are short-term trader. One of the most popular product is active trader. Every night it runs, and basically it doesn't care about Powell, it doesn't care about unemployment data. It basically says BIIB, right? This was posted last night, basically saying that BIIB should outperform the market, and actually does, right? And should do better than the rest of the stock market and the sector, right? So this was a good signal. I like that, right? So if you want to be, if you like that theme of biotech benefiting from the lower interest rates, right? One of the first movers were interest rate, right? And usually I say follow the bond market. It's probably more accurate than the equity market. And if you see a sharp breakdown, maybe it doesn't make sense that the equity market are going higher, but the bonds yields are going lower, right? Because usually when you have a sharp move in bond yield, it's an area of concern, right? Area of concern. Like in April, because of the tariffs, we had a sharp move to the downside. That could means that bad economic data is not good for the stock market, right? So the yield is continuing to go lower. So that's active trader, right? And the idea is you buy at 137 or 139 based on pre-market. Pre-market, actually today, market was up, right? 0.5%. So you would buy at 139.94, and usually I would wait, right? Wait 15 minutes. So 5 minutes, so September 8:30, right? It gapped up 5, 10, 15 minutes. You could buy. In this case, you would be down, right? I mean, if you put open order, market order, which I usually don't like to do, then you would be flat. But you can see that definitely it's this. If you're looking for short-term bullish idea, this is the idea that as of right now is still outperforming the market, right? Biogen. You can buy stocks or you can buy options, right? I suggest again, look at the strategy A, just look at the pre-market data versus strategy B. If the pre-market is up, then you would buy at 139.94. Actually gapped up and never had that price point, right? You look at the stop loss of 1%, right? And break the trade into two. In general, when we suggest to have 4 positions at 2.5%, meaning that each of the position try to break it into entry point, minimize the risk. And then if it's 1% down, then you would exit out the position. If you look at the options data, right, you can also do the same trade using options data. Then you would buy weekly options, right? You can buy this Friday expiration, right? If you're a day trader, you can buy it next Friday. If you don't like day trading, you would go to next Friday or monthly. You have choices. But same idea, you work off of predicted stock prices, right? So 136 call, 395, that's 136.95. And then 1% move in underlying stock for options, obviously it's leverage, but it's still, $1.36, right? For 1% move to the upside or to the downside using options data. So those are the signals. Some of these signals, same thing with weekly trader, monthly trader. Right? If you look at the weekly trader this week on Sunday, model runs and gives the predictions, MongoDB. So if you bought on Monday, MongoDB, which was, well, Monday we were closed, September 3rd. Yeah, if you bought on September 3rd, it's actually up very nicely. Same idea. You can buy it at Friday's close, or you can look at the predicted low, right? Friday's close or predicted low, and then you exit out if it reaches, in this case, 2.5%. 2.5%. MongoDB moved to 2.5%, and then you would be out of this trade. So these are the trades you kind of have to manage on your own. These are ideas. So vetted ideas, right? Generated by AI models, financial engineering, neural networks. We have several of these models. Then they're pre-screened by Keith and I, and they are posted on Sunday for weekly trader and monthly trader, and every day for active trader. If you want to know what I trade, then you go to Elite Circle, right? So, I mean, you have different trades. Today, I think it's all options, but I also trade stock positions, right? I also trade stock position. Let's see while it's loading. So today, I did spiders, right? I sold call spreads. This is a short-term trade, call spread, close it for 10 cents. Broadcom, how's Broadcom doing? Probably want to close it by now. Let's see, Broadcom, 5 minutes. It's not going there, so maybe close it, right? Market is selling off, oversold. It's not going lower. Okay, so I'm going to close Broadcom because I don't have more time to watch. If you do, it actually was a 333. Wow. Or did I get fill? I could have got fill. No, I did not. I did not get fill. It's actually not going 30 minutes. We posted new low, 333. Okay, I guess we can still watch it. We have a few minutes. So once I close it, so the goal is to close, right? The options that expired today, you do not want to get a sign, right? The worst case scenario, if the Broadcom closes at this price and I get a sign on the short call, that means I'm short the stock, right? I'm shorting the stock. And then Monday, we have a great news about, extra, tariff reduction on Japan. We had maybe tariff reduction on China, and all of a sudden, Broadcom is at 350, right? And then instead of losing, risking 80 cents, right? I'm risking, could be $8, could be $10, could be $20, right? Getting a sign is one of the first thing you want to learn to avoid if you trade in options, right? So the goal is by end of day, well, the spiders I'm already out, but Broadcom I need to close, right? And I need to carefully monitor it. I mean, for now, it's not catching a bid. SPX, I mean, it looks like it is. It looks like that's gamma at 650 is supportive. Okay, let's close it. Probably not going to change. Right, so I'm going to close it for $1.45. Okay, so I'm out because after this, I'm going to be doing different things. I think we have a lot of people accessing this. Close. It's a busy day. Yeah, looks like it's time. Okay, but I did get filled on Broadcom at $1.45. You can close Broadcom at $1.45. Yeah, 650 on Argo was compelling. Thank you, Fred. I appreciate it. All right. So you can see it's a combination of option spread trades. I close Meta longer term trades, and I also have stock, right? Triple M. Meta was ideas to buy the stock or the spread, and these are some of the other trade ideas. Hedge. Sometimes I hedge the portfolio, QQQ put spread that I hedged, also closed today. Any questions so far? So that's Elite Circle. I encourage you to sign up if you haven't. You can get SMS messages every time you trade, right? You get access to live trading room. If you're not in live trading room, you can watch the recording, and you can always go in and look at the orders, and all of my orders and all of my positions as well. Any questions? All right, so we've covered active trader, weekly trader, monthly trader. If you just want to, instead of getting picks and tools, if you just want to follow my trade, we do have shadow trader. If you just want spreads, option spreads, then that's premium portfolio, right? It just depends on type of trading you do. Some people want to see everything, some people just want to see spreads. If you just want to see stocks, robo investor, right? These are all the stock positions and signals. That's all I have for today. You guys are awesome. Thank you very much. Keith will finish the closing bell. Again, keep an eye on Broadcom if you decide to watch it. Just be careful that you don't get a sign, right? You don't get a sign. It looks like it continues to grind lower. Okay, so it's worth $1.10 now. All right, any questions? All right, guys, thank you very much. Have a great weekend. Keith will be at the closing bell. Try to make it at 2 p.m. if you can. And then if not, Monday morning. I'll see you at Monday morning. Enjoy your long-term weekend. And thank you very much. Have a great day.